Welcome to this new webinar titled Introduction to Chart Types, brought to you by iFOREX. Without further ado, let's dive in and explore these interesting charting techniques. The first chart type that we're going to explore is the bar chart. It consists of a vertical line where on the highest point of this vertical line is the highest price of the session during this session, and the low price or the lowest price of the session is found at the bottom of this vertical line, the low price. The first price of the session, the open price, is denoted with a tick to the left, a small horizontal line to the left of the vertical bar. Similarly, the last price of this session, the close price, is shown with a tick to the right, a small horizontal line to the right of the vertical line, to the right of the bar. Good. Now, the open price might be higher than the close price, right? So it implies, of course, that there were more sellers than buyers. The rest is the same. The highest price during the session is shown at the highest point of the vertical line, the high price. Similarly, the lowest price during the session, the low price, is found at the bottom of the vertical line, and the first price of the specific session of the specific time frame is denoted with a tick to the left, the open price, and the last price of the session, the close price, is shown with a tick to the right, a small horizontal line to the right. We can talk about the range as well of the bar, of the session, and what the range is all about actually is the distance between the high and the low price. It doesn't really matter the location of the open and close, of the open and the close. What matters is the high and the low price during that session. The difference between the high and the low is the range. And of course, the bars they appear on the trading platform, on your chart, on your price chart, like this. Now, we can discuss relationships between two consecutive bars, so we can get more info about the market. For example, we will talk about the up day, the down day, the inside day, and of course the outside day. Let's explore them in more detail. So, when we have an up day, we mean that there is a higher high and a higher low, right? The high of the last bar is higher than the previous high, and the low price of the last bar is higher than the previous low. Higher high, higher low. What does it mean? It means that there are more buyers than sellers. Great. Similarly, a down day shows a lower high and a lower low. So the high of the most current bar is lower than the previous high, and the low of the current bar is lower than the low of the previous bar. Lower high, lower low. What does it mean? It means that there are more sellers than buyers. So, inside day, here we have a lower high and a higher low, right? So, the high price of the most current bar is lower than the previous high, and the low price of the current bar is higher than the previous low. Lower high, higher low. And of course, it implies that there is an indecision in the market. There is a pause in the market traders, the market is expecting some news to come out before they decide their next move. Good. And last, the outside day, higher high, a lower low. So the high price of the current bar is higher than the previous price, and the low price of the current bar is lower than the previous low. Good. So what does it mean? It means that there is high volatility in the market, there is turmoil in the market, and perhaps this is a situation in the middle of high impact news. Advantages, of course, of the bars, of the bar chart, is that the bar includes all available prices: open, high, low, and close. So we have a lot of information on the price chart to decide how to assess the traders' behavior, the market behavior, so we can decide our next move. Because of the high and the low price, it's easier to draw trend lines, right? And it's easier to identify gaps. Disadvantages: some knowledge is required, especially with the tick to the left and tick to the right. We need some time to get used to that, but it's after some time, I'm sure that we will get used to the open and the close price identification on the price chart. Another disadvantage is that bars do not show bullish and bearish sessions with a color, unless we adjust the colors manually on the platform. So this brings us to the candlestick chart. We discussed that in a previous session, and of course it consists again of a vertical bar, of a vertical line, that is called the shadow, the upper shadow and the lower shadow. The highest price is the high price, and the lowest price on the vertical line is the low price. Now, if the first price of this session is lower than the close, then the rectangle area, it's white, or of course any other color you decide to have it, as long as you remember what is bullish and what is bearish color. Now, in this case, the open price is lower than the close. The first price of the session is lower than the close price. It implies that there are more buyers than sellers, and in this case, the color is white. Similarly, if the close price is lower than the open price, then of course we have a black rectangle, which implies that there are more sellers than buyers. It's pretty straightforward. Now, if we draw the price action, like the first price of the session, the open price, then let's assume that the price moved higher and recorded the highest price during the session, the high price that is, and then it dropped lower to the lowest price of the session, the low price, and then finally the last price of the session, the close price. So if we draw the candlestick, then we have of course a white candlestick, since the close price is higher than the open price. High price and low price are pretty straightforward, right? Similarly, a bearish candlestick, a black candlestick, where the close price, the last price of the session, is lower than the open price, the first price of the session. That's why the rectangle area is black. And of course, the high price, the highest price during the session, is at the top of the upper shadow of this vertical line. And similarly, the lowest price during the session is found at the bottom of the vertical line, of the lower shadow. Some more terminology about the candlesticks. The distance between the high and the low. The distance between the high and the low is called the range or the range of the day, and I prefer to call it the range of the session nowadays, since we have a lot of sessions, a lot of time frames, like daily, 4 hour, 1 hour, 30 minutes, 5 minutes, and the likes. The upper shadow is the line emerging above the rectangle area, and the lower shadow is the vertical line below the rectangle area. The rectangle area, by the way, is called body or real body. It doesn't really matter what the color is. The name is body or real body. You can use these two terms interchangeably. Excellent. Let's move on and let's put everything together. The price action, open, high, low, close. Then we can draw the corresponding bar, right? The high price and the low price is pretty straightforward. And then the open price, the first price of the session, is shown with a tick to the left on the bar. And the close price, the last price of the session, is shown as a tick to the right. Similarly, on a candlestick chart, the high and the low are situated at the highest point of the vertical line of the upper shadow in candlestick terminology, and the low price is shown at the bottom of the lower shadow. Now, since the close price is lower than the open price, then it implies that there are more sellers than buyers, and that may be shown with a black body, with a black real body, right? Again, the distance between the high and the low, is called the range. Of course, it's shown like that on your trading platform, black and white candlesticks, and once again, you can change these colors to your preference. Let's introduce another chart type, the line chart. A lot of beginners start with this chart type. They find it easier, right? Why? Because it's a line composed of the closing prices of each session. So in this case, we have 4 white candlesticks, meaning that the closing price is here, 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 and here. So by connecting these consecutive closing prices, we have what we call a line. Now, let's move on, and it appears on your trading platform as a line. That's why the name line chart. Let's take a look at some disadvantages though. Yes, it's easier to use for beginners. It has less information though. There is no open, there is no high, and there is no low. And of course, this makes it more difficult to draw trend lines and identify gaps. And another example is here, another disadvantage. Even though we have a straight line, upward straight line, meaning implying that the market is moving upward, the last session, relatively big session, big body, it's bearish. So it opens at the top, near the top of the candlestick, and it closes lower near the bottom of the candlestick, meaning that there are more sellers than buyers. But by looking on the line, this very important information is not shown, and this is a disadvantage. The line chart only has the closing prices. Yes, some traders find that the closing price is the most important price, and that's why they use the line chart. But once again, the line chart has disadvantages, and this is very important for us to know in advance before we start using the line chart. Guys, this is what I had for you today, and I hope you learned something new, and I hope you enjoyed it. You want to understand markets and technical analysis better? Follow iFOREX for more quick and easy to understand guides to trading. Stay tuned for more.